Hello traders, it's the Cowboy here. Welcome to another edition of Bitcoin and Ethereum technical analysis for the Elliott Wave Cafe. So let's begin. It's been almost a couple of weeks since we've done the last video, and Bitcoin sold off and made a new highs, and now we're kind of consolidating here and trying to pick a direction. So if I quickly go back to the last week's video, I'm not going to play it, but this was pretty much the chart that I was showing back then, and the red line was the previous couple of weeks when we recorded. So I kind of trying to continue to present this just to kind of keep things in perspective in terms of the Elliott Wave structure. And you can see here that since that last video that we made it for the past couple of weeks, we made a new high in here, right? So this is what we were targeting here for the fifth wave, and that's exactly kind of what the market did. So the question is, what's happening since this new high? We tried to break 20,000. Obviously, there's a lot of resistance up into those levels, and the market might be falling back here and trying to do maybe a fourth wave decline. So we continue to stay with this red count, as kind of our preferred interpretation in terms of the substructure of the moves, but I also have a couple of other ones which I'll show you here in a second. So let's just kind of go back to our charts. This is the red. I've modified a little bit the structure of the channel. I just kind of connected the bottom of this, with the pricing back here from October 8, 2020, and then just, copy that to the top of the prices back here since May 6, 2020. The other channel that we've had in the video was kind of shaped up like this, and it was looking more up into this channel to kind of consider this breakout here more of a stronger third wave advance. So having said all this, what's happening next? Is it still a nice correct? Is it still a correct interpretation here, looking at this as being a 1-2, with the smaller 1-2 in here? That's a longer third wave advance, and we're falling into some kind of a corrective pattern in here. Could be a triangle, right? If wave 3, for example, ends up into these levels, and this is not a fifth but rather a B of a triangle, that would mean that this is an A, that's a B. We're doing a complex C, D, and E, and then we're going to break up higher. If wave 3 finishes up into these highs, and this way I kind of have a fourth wave deeper sell-off here compared with what I have here in the second. That means that this fourth wave is just barely starting, and it could be a triangle, it could be maybe a complex correction, it could even be a zigzag if this gets a little bit more impulsive, but you want it to stay no lower than fourth wave of a previous degree, which would be these levels in here, which is about 16,000 to 70. So in terms of a pullback, I would be totally fine with that, and this thing kind of developing sideways, coming back towards the trend line before we get back and attack, make new highs, and really kind of break out of this and just continue to move higher towards this larger third wave. And we would have to measure from whatever this fourth wave ends. You would measure about 100% equality with the wave 1. You can do some Fib multiples, you can do some projections, so on and so forth. So this is kind of what I'm seeing in here. If I wanted to do a little bit of a fourth wave pullback in terms of Fibs, let's see where 38.2% comes in. So you can see that 23% is at about 16,592, and if I pull this a little bit lower, it's about 15,020. So we can actually break below this trend line and even come, let's say, as low as these levels back in here, and still be a pretty a decent retracement for a fourth wave decline. Although because this was a little bit sharper, I would like that this here it's a little bit more sideways. So I would not consider this a fourth wave if the market starts to break lower and does it so aggressively, because then we're going to attack some of those lower Fib levels at about 50 and 618, and then we run into the territory of the wave 1. So for a sideways consolidation, I always like, especially for a fourth wave triangle, I like these things to stay near 23% retracement of 3, or at the most 38%. So this is what I'm watching, 15,000 and 16,592. So this is under our kind of bullish or ultra bullish 1-2 scenario. And then let me take a look also, and I'll come back to the other counts, but I wanted to take a look at some of our moving averages here and see where we are. So in terms of a daily moving averages, we kind of are breaking below this 21-day, which is usually supports prices in an uptrend. And we've tested it a couple of times. We pulled back. Again, we are near it, but looks like we're correcting a little bit lower. It looks like it wants to turn. So I'm not sure exactly how much more power there is in Bitcoin in here to kind of make a new high and continue to be very aggressive. I think there is a chance here that we're entering into a period of sideways consolidation. Like I said, maybe a fourth wave. By that time that finishes off, this 55 is going to kind of turn in here. The 21 is going to start to meet it. We're going to do maybe that triangle that I'm talking about. In the meantime, the 200-day will rise a little bit higher in here, and then we're going to continue to push. So, overall, I remain, very constructive on the upside as long as we're sitting solidly above this 200-day. I think you wanted to trade this market from the long side, take every opportunity you can in the sell-offs and the correction, so either accumulate or to begin new positions. You got to watch for risk reward and all that. We talk about this all day long into our pro room. So if you guys want to come and visit the pro room where we take actual trades based on the Elliott Wave structures, we don't just present counts and have, let's say, 5 or 6 different scenarios. We actually put our money behind it and say, okay, this is a good retracement in here. Based on this count, we're taking a long. This is where the stop is. This is where the target is. And, we follow that all day long, and we go back and review the trades, what went good, what went wrong. And it's all, it's always, we're using the wave principle to help us into our trading. All right, because there's a lot of guys out there that just present counts, but they're afraid to tell you the trade, or they're not actually, using what they're preaching. So I think that's very important when you use this methodology. All right, so going back to this is the MAs, and I'm going to take a look at the weekly as well. And this is, you can see in here that the weekly MAs are rising. Obviously, 21 week right now, it's at about 13,422. Should provide support on the way down. I mean, you could see, back here from 2015 to 2008, 2017, 18, how it nicely supported the prices. So we wanted to stay on the right side of this thing. So continue to watch this as the market comes back and tests it and gives you opportunities to join the market. But for right now, we're in a definite bullish trend, even if after all these corrective patterns. Also, I want to take a look a little bit at the candles. You can see in here that this formation here continues to look bullish and point upwards. What I do want to see, I don't want to see more of a stair formation setup, something similar to this, where the markets are, or something similar to this, where the markets are just, making new highs and so higher highs, higher lows in here, and then they're just building a ramp to try to build, another breakout to the upside. So the moment this market kind of sells off and gets a little bit more aggressive to the downside, we're starting to notice some bearish candlestick formations, then I'm going to have to shift to some of the other counts that say that possible, there'll be another second wave forming in here before we kind of re-embark higher. But for right now, I'll kind of stay with this, and I like what I see, on the weekly candlestick patterns so far. Okay, let's go and take a look at our blue count. So the blue count is a little bit just slightly different. What that does is, instead of considering a wave 1 in here and a wave 2, looks at this whole thing as being a wave 1, and this is a wave 2, a very small second wave. But what this allows to do is allows us to continue to look higher in here and say this is not a third, but rather it's another 1, 2. So you can see I have a couple of channels in here. So one of them is this, smaller aggressive channel that happens as part of this wave 1 in here. And then this minute wave 1. And this other channel, the larger one, just looks at the whole structure. So we're kind of testing the bottom of the smaller channel right now. It could be the end of this wave 2 or just a portion of the wave 2. So if I go from a 1 day to a 12-hour chart, you will see that I'm considering a possible wave 1 completion up into this level. So you have a nice 1, 2. This whole thing is a 3, a triangle in 4th here, 1, 2, 3, 4, 5. You finish this wave 5th, so you get this wave 1 done. And now either the second wave is over, all right, and then this is a 1 and this is a 2 of the larger third wave, or wave 2 is not done yet. Okay, and this is just the initial decline of this of the second wave. So you're going to be looking at this as being, maybe a flat in a second wave. So you can look at this as being an A, up in B in here, and then you're doing some kind of a flat here in a second wave. You can do, you know, maybe this wave one, I'm wrong in the placement of this wave one, and it doesn't end here, but it ends up into this level. So I talked about that, you know, into the other count, and this is just the first initial decline of this larger second wave. So as long as we stay somewhat within the limits of this second wave of a larger degree, you know, I'm kind of happy with it. If this thing starts to get much larger, then we're going to have, you know, different issues in here, right? So this is, again, you know, it's just a kind of a guideline when you say that you have a, you know, a smaller degree second that's larger than, you know, the higher degree second wave. You know, a lot of people call that a degree violation. There's no such thing in the Elliott Wave world. You know, there's no specifics based on that. So it's more of a guideline where you're looking at it, and you really don't want that second wave to get much larger. But if it does, right, it's not a crime. You know, sometimes it really fits better. The reason why we do that is because you wanted to try to avoid, you know, that constant labeling of 1, 2, 1, 2 when you have very disproportionate waves, and it keeps you kind of more real and more correct on the right side of the market, because a lot of those things could be just simple ABCs or X waves, and you know, you don't want to really abuse that guideline. So anyway, that would be the next kind of scenario that I would go to, just to allow me to continue to remain bullish on Bitcoin. So if this is the whole of a wave one, either to here or to here, then I'm looking for the second wave that's probably going to pull back here towards the trend line, you know, over the next week or over the next couple of weeks. And then, you know, I would look to see if I can initiate anything back into these levels to keep me moving higher here and staying bullish on it. Right, so this is the our blue count interpretation. Under the green is a little bit more bearish, because green is one of those counts where we're considering this move here. You know, as you know, we are not very happy with, you know, a couple of the small correction, considering them second waves in any way, right? So then, you know, let's just give this market more room to breathe and create a proper second wave decline by considering this whole thing a wave one. And there would be a 1, 2, and then you have this larger third in here, right? You have your fourth in a triangle. This is more sharp in here as a second, more sideways as a fourth, up in fifth. And now we're just beginning to do this decline. It's very early. There is no indication here this is going to happen or not. It's a count out there that's kind of, you know, just kind of lingering until we're starting to make new highs, and this thing gets very, very, even under this scenario, you know, I think it's kind of unlikely, just because of this, you know, call it extended fifth wave, although it's not really extended because it's smaller than wave 3. But you know, just in terms of its proportion compared with this initial advance of these lows. So if this is what it is, then I got to see a pretty clean impulse in here in 5 waves for a wave A at least, because all I'm going to get is I'm going to get a zigzag, or maybe a flat or a double zigzag, right? So and then, you know, that would kind of put me in the camp that says, yeah, I think we're going to correct a little bit more in here, and you get a B, and you'll get a C for a proportionate second wave. You know, but this kind of pushes you into the summer of next year for a larger second wave pullback. So, you know, there'll be a pain of corrective and bearish market in here over the next 6-7 months if this is what's starting at these levels. We'll get more indication based on an impulse. You would want to take this 16,000, you know, quite aggressive to the downside. It will almost going to look like a, you know, double top here. People are going to scream like, hey, double top, you know, and Peter Schiff will be very, very happy that Bitcoin is selling off. All right, so that's just you know, looking as a wave one top. So anyway, this is it I have in Bitcoin. So I'm going to switch over to Ethereum and see what Ethereum does. And you know, not sure if I showed you guys any of these longer term charts, but you know, on the green count here, we're looking at this as being a wave one top cycle in here, followed by a 2. Then you have another 1, 2 in here, and now you're basically, you know, working, you know, a much larger wave count in here, a big intermediate third wave. And we've done wave 1 of that, wave 2, and we're in the middle of this larger third wave. So based on that, right, we have our guidance to the upside. We place the channel, right? This is the meat of the move, this larger third wave intermediate, and we're in the middle of it. So again, just like in Bitcoin, I want to give this market every chance it has to continue to push higher. So, now that we're correcting a little bit from oversold levels in the RSI, we're pushing back maybe towards the bottom of this channel. And then from here, we can kind of turn. This will become, more than likely another 1-2 in here, and then you're going to get a push higher, right? So this is your 1-2, 1-2, and then you continue to build a larger third wave, and then fourth, and you continue to push higher here towards 1,000, maybe even higher. Let me see if I have any internal on this count, and just kind of take a look at that. Yep. So that's how it looks. You have a 1-2, and then this is wave 1. And then we're doing a wave 2. So similarly, like a similar story like in Bitcoin, there's a possibility that this could be a triangle, and this wave 1 is not done fully yet. That this develops as a triangle in here, belongs maybe to this wave 2 in here, and that gives your wave 1. Then you're going to go back here in a second, and then you start your third. So either way, I think there'll be a move to the upside coming either from now or after we push one more time to the upside. The alternate, as I said, I've placed it in here, as you guys can see, right? So that's, if this is all of 2, then, we wanted to push higher. Again, here is the thing, right? So just so we're kind of clear, this move in here, it's finished, right? That's a 4 and that's a 5. Right, this was, let's say, your leading diagonal in a way 1, 2, 3, 4, 5. So this is your leading in here in a 1. That's a 2 in here. This is a kind of weirdly shaped third wave because of this, kind of fuckery back here. Unless this is a 1 and a 2 in here, 3, 4, and 5. Okay, and then that gives you your wave 1. So that's this is a second wave back in here. So as long as we kind of, remain. Obviously, the invalidation would be below these levels, but you're never going to wait so much, for you to not to have confirmation of a second wave, because by the time, you're moving, so deep in here, we're going to have to start having issues with breaking this trend line. So, I don't really kind of consider that as being, a viable opportunity, but or possibility. So, again, I can consider this a fourth wave, as we're developing right now, maybe like an A, B, C, D, and E. We're pushing higher here, and then that creates this wave 1 top. Then we're going to sell off in a second, and then we move to the upside. The other scenario, very quickly, is that this is actually the top of the wave 1, and this is a wave 2. Okay, and we finished this move in here, and this is a secondary 1-2. And this you'll find out just a little bit quicker, because if you're selling off below this level, that becomes invalid. So, I like this formation. It's corrective. And if this, if this pans out and we're starting to break higher quite aggressively, then I'm going to shoot over to this scenario and just to allow for a little bit more, for more bullish subdivisions kind of going higher, right? So wave 1, sharp in 2, 1, 2, we're just getting ready, and then kind of bam to the upside, and we continue higher. But overall, as long as we're staying contained in here, there's, you can see a couple of counts, a couple of scenarios that can happen. So, you got to pick your battles. You got to know where you want to get in. You got to know what your stops. You got to know exactly which pattern you're trading. So if you're trading this 1-2, then if the market breaks below this level, you got to get out of the trade, because, it doesn't do what you thought it was going to do. If you're going to switch to second wave of a larger degree, then your stop have to be here. And now if you're going to allow the market to get all the way back here, you're going to be in a big trouble, and you're going to lose a lot of money. I used to play these games, back when I was stupid enough to do this, and you end up holding a lot of negative things in your account, and the counts sometimes don't pan out and they continue lower, and you're all lost. So make sure that you trade what you're seeing, and you respect that, and don't switch your thinking after the market kind of fails to do what you're thinking in your original proposal. So I'll leave it at that, guys. I think I covered what I could in here for Ethereum and Bitcoin. Please hit the thumbs up button. Come and visit us into the pro room. In there we do analysis of Bitcoin and Ethereum, alts, and we cover also a bunch of the macro field, from the equities, stocks, and we look at oil and gold and forex, and we present different charts and opportunities. We trade, again, we trade what we say, and we look at the counts, and we put them in our favor as much as possible. So yeah, give us a try. There's a link below that takes you to the Telegram room, and there's a bot there that will take your information and go from there. Otherwise, I'll see you guys back here in about a couple of weeks if I don't make another video, maybe about a week in with some other information, but we'll see. All right, I'll leave it at that. And again, thanks you for watching. We're very, very close to 900 subscribers to this channel, which is encouraging. I think people find value in what we're saying here, and I love Elliott Wave. So continue to come back and subscribe, and yeah, any comments you have, any suggestions, let me know, and I'll be happy to take a look at it. Again, visit us, and there's a free Telegram room as well where you can visit for discussions, or if you have questions for me regarding anything what the service provides, or if you want me to look at any other charts, if I have time, I'll be happy to help. All right, thanks again, and I'll see you guys later. Bye bye.